Okay, guys, good morning to you. Today is 7th October 2025. Crazy Market Talk with KEL. Crazy anytime, anywhere. Now, today, as I promised, there's a lot of market information for you, so you need to stay tuned. There'll be on the bull, on the bear, and what to expect for the market. All right, so let's go into great details today. So let's share something more important. It's the fundamental first to begin this morning. Yeah, give me a moment. Need to switch around my screen. Okay, here we go. Okay, let's start the day first by going through what happened last night in the US market. The S&P 500 and Nasdaq closed at fresh record high, once again helped by AMD gains. All right, so let's look at what happened, okay? So S&P 500 and the Nasdaq actually closed up higher, while the Dow actually retreated a bit, okay? Now, it was because of the Sherwin-Williams and the Home Depot that basically weighed down the market, yeah? Hello, can you see me? Okay. All right, then of course the S&P 500 and the Nasdaq rose because of AMD up by 24% after they reached a deal with Sam Altman, AI leader, which ultimately ended up giving the ChatGPT a 10% stake in the chip maker. Wow. So basically with that basically pushed up the market because now it's already the AI driven movement, and that's what causes this to move up. Now, one thing is that we all do know that the AI is something very similar to what happened in the 1999 Nasdaq.com, where everybody is just going gaga and crazy on the .com frenzy. Of course, back then, .com is like, the next thing whereby you can use the internet to make business and stuff, but we only really started using internet for business only about 6 years to 7 years later. And in fact, the boom period coming only during the COVID period, yeah? Okay, so now the thing is this, we are now definitely have a lot of people believe that the S&P 500 is going to hit towards the 7,000 mark, all right, by the end of the year. So we know that there's a lot of data blackout because of we still have the government shutdown. And of course, we also have a few Fed officials coming out to just speak about the market. But generally, some of the markets on the buying mood, yeah? 1 minute, someone's on the other side. Let me just change the minute. Okay, for those who are driving, be very careful. Just listen to me. Don't look at the screen. Thank you very much. Yeah. Okay, boss, don't get into accident. Yeah. Okay, let's continue. Share my next screen. Back to here again. Okay. All right, now Paul Tudor Jones, the legendary hedge fund superstar. He's the guy who predicted the 1987 stock market crash before it really came, and he was one of the few people who been in to buy during the this COVID period. He also one of the few people who've been selling the market during the Lehman period. So this guy has his legendary track record who sold before market crash. So Paul Tudor Jones says that the ingredients are in place for a massive rally before a blow-up top to the bull market. Okay, so basically, in short, he says that today the market is a reminiscence of the setup leading to the burst of the dot-com bubble in late 1999. Now, the difference is that it's a fiscal policy and the monetary policy that is different. He believed that the bull market still has a room to go before it reaches final phase, okay? So he's believed that now the conditions are really all in line for a more powerful surge in stock prices before the bull market tops up. Okay, so his point is this: history rhymes a lot. So I think that some version of it is going to happen right now, and then after that, there could be more explosive movement. Yeah, okay. So he believed that this is something very similar to 1999, and he feels that now the happening on the AI has also made him pretty nervous. Okay. Now, the Nasdaq has already rebounded 55% from this April bottom, and of course, it's driven by the mega caps. Okay, so we can see that this is how the Nasdaq has bottomed out in just April this year, from at 15,000, and now it's at 23,000. All right. So again, all this is a good opportunity. So if you ask me, it's all right, guys. Now, my personal take is that now we are at actually, let me just draw it out. We are now at 2025. And we are at the October period. So this 2026 January period. So I believe that this is going to happen now. The market now is here and it's surging up to October. I believe that there will be a pullback of the same magnitude until the end of the year. Before, that means somewhere around this like November, like maybe December 2025. And then after that, we're going to have a massive rally all the way until 2027. Okay, so that is my personal take, if you'd ask me. And if this time around the market do come down and hit this bottom here, this will be the one good rally that we need to really buy and basically enjoy the ride. Now, basically, why am I saying that? Because we all know that the Federal Reserve will be cutting interest rates. So there will be some help in this area. But once you cut interest rate itself, right, there will be another repercussion. The banks will not do well. And then after that, inflation will go up. Now, inflation will have a double whammy. It will basically give the initial revenue boost because of the increased cost, right? And things, for example, if this bottle of water is like cost you like $1, because due to inflation, they'll pass the cost to the consumer, and of course, in between, you add on some profit again. So from $1, it's at 130. So of course, the earnings of the company will go up, right? Let's say the inflation is only 15 cents. But because they just follow through the thing, do some packaging, and they make another 15 cents from you. So at $1.30, they sell it to you. So the inflation is 15 cents, but the earning on the company is 15 cents. Okay, so this part will increase company earnings. But the problem is this. By increasing the product from $1 to 130, that means the cost has increased by 30%, example. It will actually cause people to rethink that maybe they shouldn't buy from this company. And because of that itself, right, they will reduce the utilization. And when that happens itself, the company who buys a lot of the product, thinking that they can sell it at 130, then realize that the cost itself now is high and people are not buying and the production cost itself is there. And then what happened? The whole thing will spiral downwards. All right. So since we believe that there will be a repercussion of what will happen in 2027, a big sell-off from there, then naturally to have the market going up first is possible. So this drop itself, right, I believe it's going to be approximately about 5 to 8% drop. So stay tuned with me. I'll explain to you more in detail why I say that and also what's the number that we're looking out for. So that's why I say today is a very, very important session. Do not go away, okay? All right, so guys, this is something that to take note of, right? So the thing is this, to be sure, Jones isn't predicting an immediate downturn. He believes that the bull market has room to go, according to himself. And he feels that the combination of gold, cryptocurrency, and the NASDAQ is a very good rally. We all know that he has been buying a lot of gold. He bought some cryptocurrency and also a few NASDAQ counters. So basically, he's in the driving seat, yeah? Now, Jones shot to fame when he predicted and profited from the 1987 stock crisis, which I just mentioned earlier, okay? All right, so that is what happened. Now, for the economic data right now today, now there is nothing on the calendar until tomorrow where the US crude oil inventories will come in. And then after that, on Thursday, we have the FOMC meeting minutes, yeah, not the meeting itself, it's the minutes. So it's coming at 3 a.m. in the morning, all right? So that is where you have to take note, but it will be like, it's the same thing. There will be talk about the interest rate cut. I think that's very priced in. Now, Jerome Powell will be speaking at 8:30 p.m. Singapore time on Wednesday, which tomorrow. And then after that, we will have the non-farm payroll that's coming on the 10th of October, as mentioned by Richard in the group chat. And also, we do expect that the unemployment rate to be stay at 4.3%. But of course, I believe that this number will change. I think this number, I think this number itself will increase to 4.4%. And I believe that by end of the year, we're going to see 4.5%. And then after that, we're going to see going up to as high as 4.7% by probably June to July next year itself. All right, I'll explain more this through an MAO video, yeah? Okay, so that is the fundamental part of what happened. Let's look at some interesting this thing that I have for you on Twitter. All right, first thing first is right, we all know that the Japan 30-year bond yield has risen past 3% at 3.29%. Now, this is a very, very high level. So why the yield is going so high? Because the bond market is coming down. So why the bond price coming down? Because there are a lot of people are not very comfortable with the Japan bond right now. It's the same thing as what's happening right now for the US market. So of course, because now the Japanese, although the stock market is at really high level, but they are borrowing, leveraging in advance. It's a very similar common copy of what US did to themselves, and Japan is falling through. And because of that, right now, the US dollar is now at a 14-year very important support level. Now, this one is a very important thing. Let me just double click for you. Now, let's take a look out here. So this is the US dollar. So we can see that every time when the US dollar comes to this particular trend, the US dollar recover, right? So vice versa, we have this. So that's why now you understand why the gold price is going up, because the US dollar is faltering. So if let's say there is going to be any form of a rebound on the US dollar for whatever reason, they will think of it, then the gold price will come out quite a fair bit. Yeah, gold price may come off quite a fair bit. So I'll do the usual cross-checking within the dollar and the gold price for you right now to let you see the difference. Yeah. For those who just joined us from this Vietnam and Indonesia, welcome to this Zoom session. Good to see you guys. Okay. Okay, so let's just take a look here, everyone. Just take this away. Okay, so what we are seeing right now is that the US dollar is actually trading higher while the gold price is going up. Interesting. So what I foresee is that by right, with the dollar going up, gold price should come down, right? So every time when the dollar actually goes up, the gold price actually goes sideways or come down. So this time around, we can see that both the dollar is recovering and gold is going up. So what is happening right now is that there's a lot of fear ongoing in the market, especially the stock market now at the new record high level. So this is my personal feel, yeah? Okay, listen here. So every time when the market hit the moving average, you can see that they will always pull back for the US dollar. So it happened again previously, which is about 3 weeks ago, it happened. Now we are here again. Okay, so now what happened is this is two-pronged. Now, the first one is easier. If the market stays below the moving average and start to come down, okay, wow, gold will shoot past to the 4,070s area. I told you before, right? If the dollar is to go back down to 96.50 again, there's a very high chance gold will blast past 4,000 and it will go to the 4,070 series, okay? This is something that I already mentioned to you if the dollar do continue to come down. So that is what everybody now is looking at, okay? Now, the other thing is this, okay? If you look carefully over the last 2 weeks, there's already price in of the Federal Reserve rating cut in this October and December, already priced in. So with that, that's the reason why the gold price is going up, okay? So now on the flip side, that means that if the markets now start to change and decide that, okay, let's just pump up the dollar instead. Okay, now take a look here. If the dollar is pumped back up to 100, which is not a lot, okay, then the gold price to come down is very possible. And based on what we are seeing right now, gold price can come down all the way to 3,800 level. So if let's say the dollar is to go up to 100, there's a very good chance that gold will come down to about 3,800. All right, all clear? If all clear, press number 1 right now in the comment box. I want to see you pressing it, yeah? Now I'm doing this just because I need you to understand that I said I'm very bullish on the gold, but still we need to be very clear that certain thing itself, we know it, we don't want to go against the crowd, yeah? Okay, so of course, end of the day, if you guys understand where I'm coming from, that'll be good. Okay, all right, so there's 39 of you to 40 people online right now. Pretty cool. All right, thank you very much for all the support, yeah, guys from all different countries. So let's just look into this and how do we adopt this thing here. So okay, All right, so this one very, very important. So watch the dollar. Okay. Now I got a very nagging feeling about the dollar because when everybody's to go into one and all go into one certain place, usually the opposite will happen. That means that if everybody thinks that the dollar will be going down, sometimes it doesn't happen. So if you give me a dollar chart, take a look. Yeah, let me just show it to you. Okay, you see, when the dollar pushed up from here, it took about basically 4 days. Okay. But when it was coming down, it took only one single day to flush out 3 upside days. Can you see that? Okay. So now let's look at here's again. Here it took about 4 days for it to come down, right? But you can see that within about 3 days, the market has already covered back the whole thing. So because of that itself, right, this tells me that the dollar may not be going down anymore. Okay? Because when everybody thinks that the dollar will fall, usually the opposite will come in. So be very careful, guys, on this particular part here. Okay? So this one is something that I need you to understand this very well. Okay, yeah? So let's just skip and go to the next one. Just to go to the economic news again. Where are you? Sorry. Okay, so this one, I'm going to move back. Okay. Can everyone see this? Can you see my Dow Jones to gold ratio? Can you see that? If you can see that, put a yes for me so I know that you can see it. Yeah, because I'm on a single screen right now, it's very hard for me to gauge whether can you see it. Okay, thank you, Janet. Thank you. Okay, so this is the Dow Jones versus gold ratio. Okay, so what they do is that they take the Dow Jones itself and divide it by the gold, yeah, and get a ratio. The last time we see something like this, okay, was in 1929 where this happened. Okay, and then after that, there was a very huge movement downwards. Okay, so it happened again back in 1973, that's before the stock market crisis, and then this happened. In 2008, we all know that the start of Lehman, and then this was what happened. So guys, right now, where are we? We are exactly the same point, okay? 280208, 1973, and 1929. Those are the years whereby you have a great recession in the market. So that is the reason why, if you don't believe in the numbers, at least you believe in the statistics, right? To tell you that there's a very high chance US will see a recession very, very soon. And because of that itself, right, there will be a very high chance the stock market will pull. And that's the reason why I said there could be a 5 to 8% pullback in the market. Okay, so this one you have to take note. Now, of course, some people say that because this is no longer the truth, because now it's an AI-driven market. So what happened in 1929, 1993, 08, these are all old data. No, I don't think so, because gold and Dow Jones, they are not old stuff, they are ongoing, dynamic. And you can see that if they are supposed to continue to go up, so right, why is it pulling back down in this way? So again, guys, this is something to just take note for you. You make your final call decision. For me itself, I'm not comfortable about buying anything above the Dow Jones above 46,000. I think this is ridiculous. Now, one thing is that there's someone say this, look, you cannot call a bubble right now because if you compare notes, right? Okay, let's take a look here. In the 1999, when Cisco was going up like crazy back then, the earnings was not able to cover. So because of that itself, right, that's why they have a bubble where the hit a crazy high, it came back down to the earnings. Okay, so fair enough. All right, so now if you look at this one, this is the NVIDIA versus earnings, and you can see that they are very closely knitted together. Fine. But if you look at the stock price right now, we're at 2,500 in a way in terms of the index, and the current earnings is somewhere around here. So still there is a bit of gap. So if you look at it carefully, every time when the NVIDIA move the prices too high away from the moving average of the earnings, it do pull back. So I suspected that this will come down. So if you look at the numbers, we are talking about approximately, okay, a 5 to 10% pullback in NVIDIA very soon. So let's look at NVIDIA right now in terms of the prices, and we can see from here itself, yeah? Okay, so let me just show to you now. NVIDIA. Now, NVIDIA stock price, can you all see? Able to see my NVIDIA stock price? Can you see my NVIDIA stock price? Is yes, put a yes 2 for me. NVIDIA, yeah, NVD, all right. Thank you. I'll just be very sure, yeah. Okay, so let's just take a look on the NVIDIA share and then remove away the gold. Confuse you. Okay, so this is the NVIDIA share. Remember, it was basically coming down when this DeepSeek happened. DeepSeek happened, and that was when the NVIDIA shares fell all the way from the top of 150. It dropped all the way to below 100, yeah, down by 33%. Then after that, when they meet up with Donald Trump and friends, and this was basically what happened to the NVIDIA share, all the way gushing up. Okay, so this one, put it away first. Okay, so let's just take a look on his one here. Now, take a look again, as I mentioned. Let's take away all this thing to make it clearer for you. So what you can see on my screen right now is this. When the stock price is too high, it will always revisit the moving average. Can you see that? Can you see this again? Okay. So when the stock price is too high, it'll come back down to revisit the moving average. When it's too far away from the moving average, it will return and recover. When it's too far away, it will recover. So it's just a matter of time. So you ask me right now, the NVIDIA, there's a very high possibility for NVIDIA to trade downwards now. Okay, from where we are right now, it's at 185, right? Okay, now it's 185. I think it will come down to about 168 in the near term. All right. So I believe again now it's 168 level now. If the price to come down, there's a very high chance we'll see 168. So this is NVIDIA. All right. Again, you can disagree with me. I'm just sharing with you my personal take on how I see NVIDIA in the coming weeks. Okay. So if NVIDIA is coming down, definitely the rest will follow. Yeah. It's very simple. The rest will follow too. Okay. Then after that, once you hit the moving average, I think that's where again you can go in to buy. Okay. All right. So now the thing is this, the last one before we go to the Crazii chart. Now this is actually the NAAIM, which is the fund managers. So take a look what they are saying right now. The warning signs are flashing from the pros. Active managers are cutting back on the market exposure as indicated by the NAAIM. So we can see that it's actually reducing right now. So even though the S&P 500 is surging itself. Now, if you actually bring back to detail back in this January this year, you can see that NAAIM, when they were reducing their portfolio, the stock market went up, then it hit a peak, and then the market sold down more than 10%. So what I'm trying to say right now, we have a similar thing right here happening. And of course, the stock market is even crazier right now. So there is a chance the market may fall by maybe, like say, another 5 to 8% drop. Okay, so end of the day, this can actually be happening. So that's the reason why I am feeling more towards the sell side than the buy side. But I repeat myself, but once the market has come down, then the point of recovery is very important, yeah, to buy back again. All right, all clear, guys. If all clear itself, press number 2 right now so that I can know that you guys are still with me. For those who just joined us, welcome in. Thank you for all the support, guys. I deeply appreciate that. Okay, let's just make some money from the market. That is more important. Okay, so thank you for the number 2s. All right, so let's just continue and share my next screen, which is the market itself. 1 minute. Yeah. Let me do the day chart first. Okay. Today the internet is better than yesterday, yeah. Okay, guys. Today the Dow Jones opening price is 46,698. The MLP 46,762. So which means that today the opening price is below MLP. So it's more to the sell side. Now for a very long time, this is the first time we see the KSI being red in color. Okay. So you can see that it's a very important signal to all of us. Okay, very, very important signal to all of us. And now the thing is this, The Dow Jones, a very high chance today there will be some selling again back to the low here of yesterday. I believe that the Dow will come down and touch the low of yesterday. It may even purposely touch the pivot 2 at 46,384 first. And then after that, it may stage a rebound over there because the MA30 is supporting it at the moment. The KCX is supporting it. So the downside could be limited. Yeah, downside will happen, but most likely limited. Now, the upside, is it possible? Well, it is possible for the upside to come in. The upside will be pivot 1. The upside will be pivot 1. If the market stays above pivot 1, it stays above OP, it will go back to pivot 1, and that's 46,814. Okay, I think that will happen if the market stays above OP. Okay, all right. Let's look at the gold market. Now, as I said earlier itself, I think gold is a little bit too high right now. I'm not comfortable to buy gold, although I've been buying along the way just to make some pocket money, but I think that every time when I buy this, I find it's pretty ridiculous. Okay, so gold opening price at 39.60, the MLP is 39.25, so which means that the MLP is below you, hence the bullishness. So this morning, gold has already hit KTR plus 1, and now it's trading below OP, okay? So I suspect that below OP, it will come down to KTR minus 1 first, right? So KTR minus 1 will likely be happening in the near 1 or 2 hours, if you ask me, all right? So something to take note of. Then the pivot 2 is at 39.11. I'll show you all the stack in a very short moment. So basically of that, we can see that the market generally likes the, what they call, this movement, and everybody looks at it's like going to continue and stuff like that. Okay, so let me look at the 5-minute chart and you understand my point of concern today. Yeah, let me just share this with you. All those are coming in, going out. Okay, not too sure what's happening to your internet, but it's okay. Thank you for coming and joining us. Yeah. Okay, so this morning we have the gold price opening at 39.60, and then we have a 4 diamond. We should put a line across it. So very easily this morning, when the market breaks above OP and is above the diamond line and it's yellow candle above OP, you just have to buy. Stop loss can put somewhere around here, if not somewhere around here. Okay, and of course, if you've done that properly, the market will give you the profit of KTR plus 1 very nicely. Now, some of you say, Kel, I missed the market, it came back down, and then it touches OP. Now, once it touches the OP, it's like a counter reset. Okay, the market, you have one more chance again. So that's the reason why you get the 4 diamonds here, you put it across it. This time now it's harder, but eventually, because the KSI is green, it basically shoot up to the KTR plus 1. Okay, so this is done on the upside. So everybody now look at the downside. Okay, now there is a 4 diamond here. So by right itself, the line that you have is extend until like this. So when the market goes below the diamond line, which is here, this is actually a sell signal immediately. If you want to wait for it to close finish, it's not wrong, but because it's already breaking down, you can sell immediately if you want to. And at the same time, the KSI has flipped from green to red. So that is a very, very important telltale sign. So the thing is this right now, gold is trying to cover, trying to back to OP again, but there's double diamond over there, so we need to watch it closely. If the diamond can retain, then of course, if the market cannot stay up, then it will come down, and the level is 3944. Okay, that's something that I'm watching right now. So now we have double diamonds over here within 5 candlesticks. So let's watch it. If the market can stay up, it will recover to the KTR plus 1. But if it doesn't, then KTR minus 1 will be a very high chance the market is going to go. Yeah, let me just make the chart a bit smaller for you so that you guys can enjoy and see this better. So yeah, you can see that. So that is the difference between the upside and downside. Yeah, okay, very, very important. Okay, the next market that I want to show you, but before that itself, I want to show you something very important, the 5% rule. So stay tuned with me. Just give me a moment and search my chart out. Sorry, I'm not able to do this in advance because they don't label it at all. So it's going to be a bit tough. Just give me a while, yeah? Wait a minute. Seemingly there's some error. The chart that I used to have is not. Okay, hold on a minute now. Something is wrong on my side. Just don't seem to be able to capture the 5% rule. Okay, never mind. I'll just bring it in. Stick. Okay, let's take a look over here, everybody. Okay, so gold right now, the highest level is this number at 3977. Okay, so the 5% drop for gold can be as low as 3778, which is the number that I just mentioned to you, the 3800 level. If the dollar is to go up instead, then the gold price will pull back. And if that happens, there's a very good chance we can see a 3778 on gold. Okay. I know that a lot of people are buying gold right now, and there's a lot of YouTubers calling that gold will go to 4,500 and 5,000 and so forth. Now, going to 4,000, I think it's not too far away, but to aim at 4,500, I think it's a bit ridiculous. Yeah, that's something I feel that way too. So the next thing is this. Everyone take a look. Now, this is the RSI. Now, the RSI has been calling for a sell since the day that gold was at 3,450. So now, guys, from 3,450, a reliable indicator has been totally wrong until today, 3,977. That means down by almost $500 in terms of difference, $500. So the RSI is screaming for overbought, but the market up by $500. Okay, so now let's just bring back into time what happened in the past. Okay, this is going to be a very interesting subject, guys. You don't want to miss today's session itself. Okay, it's a very good session for you for those who want to do a comparison with our charts with conventional chart. Yeah. Okay, so if you bring this away and then you basically change the chart to small a little bit. Okay, and takes away all this sort of residue. Okay, so let's take a look since the start of the 2023. When's the last time we see something like this in the market? Okay, let's take a look here, guys. The last time we see the RSI that is so long will be here. Okay, just please for your time. And then after that, the next one, it should be now. Okay, so let's see what happened during this period of time, and then we will know exactly how to use this as a guide. So first of all, the market, okay, let me just change the coloration. The market basically went up high when it was trading here. That was, excuse me. Okay, push it to here. And then after that, it collapsed here. Okay, so let's bring it up, make it bigger, a little bit bigger, and let's take a look what happened. Okay, so this is exactly what happened to gold. It was at 2,100 back then. Here, 2,100. Okay, and then it went all the way up to the highest level of 2,450. Okay, so the difference back then itself is about $350. Now, just now we talked about it, right? 3,450 to the high of 3,977. So the difference itself is about $500, right? So $500 over 3,450. So that will give you about 1.7. Okay, 1.7 is about 13%. All right. So now you look at it over here, 350 over this 2,100. So we are also about 11 to 14%. So this magnitude run on the gold price is exactly the same price range movement for the current gold. Okay. So when is the market pull down point? Let's take a look, everybody. Now the pull down point is that first of all, the market hits a record high, as you can see. Then after that, the market starts to swivel try to go to the next high very nearby, couldn't, and then after that, on this very day, the market in the same fashion below OP will sell down all the way and collapse or whatever gains there were. Okay, and after that, there's a second wave in the later part. Okay, so the thing is this, if you look at this right now, guys, we're going to bring this back again to the current situation. Just a moment. Let's bring it back. Okay. Now we do not have the top yet in a way, but we do know we have a closing near the top. That's something to take note of. And then there is a black candle right now trading below OP. So everybody, you should know that the KCB now for gold for today can be as low as 3889. I repeat, 3889. Okay. Now 3889 is almost $70 away from the current level, $70. Okay, so I'm not too sure what will lead to a $70 drop in the gold today. I don't think it may happen today, but it may happen over a few days later. I don't know. But the thing is this, based on the KCB, the next available is 3889. Okay, so now if you look back into our system itself, the Crazii system, we'll bring it back to you. Okay, if you look at the day chart, okay, can you see 3889 is available on the screen here itself? 3889, yeah? So if the market do come down, there is a very high possibility to see 3889 get traded in the next few days. Okay, not today. Maybe if we do this, a bit thing, but who knows? You have seen it before. One day gold can drop by $100. I've seen this before, yeah? Okay, so traders just think of the OP rule and be very, very careful on that. Okay. All right, last one before we take our move is the Bitcoin. The story of Bitcoin continued to blossom. Bitcoin has went up, but guys, be very, very careful because you can see that the Bitcoin is surging upwards, as you can see, but the boys are actually dumping. So which means that now if the market starts to stay below OP, that is one of the reasons why they are selling. The MLP later will be very important. It has to stay, and if the market break OP and MLP, then I will say very safely, Bitcoin can come back down to 121.88 level. Okay, so of course, if you go down further, it can go even worse, but at least for now, we're at 24,000 or 124,000 versus the target of 121.83. Now, can the Bitcoin go higher? Can, of course. If the Bitcoin will go up, you'll have to breach the all-time high again to go to 126K. I think that is what you are looking at itself. If the market do go up, it can go as high as 126K. But if not itself, right at the moment, if it stays below OP, there's a very good chance that the Bitcoin can come back down to 121.883 level on the long term. Okay. All right, guys, that will be all of today's sharing. It's a good 45 minutes, and I hope that you guys have learned something from here. I wish you all the best in trading. This is KEL signing off. Take care and have a great time. Bye-bye. See you online later.